Ira Epstein of Linn and Associates with your metals market wrap-up, and this is for Wednesday, the 27th of November, 2019, and we're just about 3:20 in the afternoon. Now, before I get too far, I want to remind you all that I don't know if I'm going to come into the office on Friday, which is a half day of trading, or not. Got a lot of family in from outside, but if it gets to the point where I need a break, I might just come into the office. I don't live far away from the office. In summer days, I walk it, so it's not hard. And I'm at the Board of Trade, so interesting place to be in Chicago. As you can see in the metals, we're still seeing gold and silver to the downside. Copper, pretty much an unchanged day. The stock market, another day of gains. And the dollar's still up. That dollar's weighing on the gold market. I mean, you know, you go higher and higher in the dollar, you got to worry what's there. Interest rates today also gained a bit back. So we've been seeing them fall, and I was looking for a point right in this area, as traders of my morning subscriber know, where I thought the market was going to fail, and we seem to be getting that. So on the week, so far we're down $10. Now, metal markets are going to be open on the electronic markets tonight, and I think they're open Friday morning as well, just so you know. So I think they'll reopen tomorrow night electronically. You might want to check with your broker up until about noon on Friday. Electronic markets, don't worry about the pits. And the market, as you can see, down. You can see on the daily charts, there's nothing yet that looks bullish on this. The market's been working in waves to the downside. You can see this pattern that you've got a higher high, lower low. Now that can change. If the market were to take out 1450, 660, you could end up with lower highs, lower lows very easily. Right at the bottom of this area, where's the Bollinger Band and the moving averages? Well, let's first look at the moving averages. The 18-day average of closes keeps dropping. It's got resistance now at 1476, and I'm noticing that we've gotten the 100-day around 1496, way down near the 1400 levels, the 200-day. The Bollinger Band's got its support waiting for the market at the 1448 level, and momentum is oversold. So we still have a market that's got bias down, oversold, and not putting on a pattern of trade. I read today on the news wires that somebody came in and bought a big amount of $4,000. You just heard what I said, $4,000 calls, and they're not long dated. So interesting to see what that's going to do. Somebody sold it to them, as I understand, for about $3.50 a piece. I think they go out a year. So I mean, that's an awful big price. You have to triple in price in order to get your money. That's quite a bit. If you look at the gold ETF, you've got the pattern of a higher high, lower low. You can see in the market just drifting sideways. It is not oversold. It's still got both numbers over 30, but if it lets go through here, 135.83 is the Bollinger Band support, resistance back at 138.35. When we come to the GDX, first, let's do the juniors. You've got this pattern of a lower low, higher high. That is not a trend. Second, the market keeps fighting at the 18-day average of closes and is not going anywhere. You do have momentum up, bias down, no trend. In the big GDX, number one, the bias is down since prices are under the 18-day average of closes. The pattern here is different. You've got higher lows with today's action and higher highs. So you've got the swing line up, the bias is pointing down, and momentum is flat in the water. I'm going to call it neutral. Gold-silver ratio has fallen back right to what I call that line in the sand, that 18-day average. It's right where markets go to when they want to figure out what to do next. And boy, you talk about a market that's given you the correction and just stopped on the money. It's just what I teach. That's often what happens. As for silver, notice it's getting very close to the 18-day average of closes. Again, like the gold, no pattern. It's got a higher high, lower low. It could reestablish a downtrend if today's lows of 1702.50 are taken out and the market stays under the 18-day average of closes. That could put into place 1658 level. If the market gets through the 18-day, then the 100-day average in resistance terms is waiting for the market. Again, still so far, still no trend. In the copper, again, no trend. And this is so typical at this time of the year, so don't get upset with that. you're at a point in the year where people are going on their Thanksgiving trips, their mind's not on the market. Come the first week, Monday, they'll be back involved. Lower low, higher high, caught in the Bollinger Band area actually, and just sort of meandering around. You had a break low to the Bollinger Band here, a rally high up here, and you've just been stuck in that ever since. In the platinum market, you're down $14 today, and the market did what in the process? I was looking at this hard. I'm arguing you've got lower highs. I can make an argument you have a higher low. Easy to make. So I'm going to give the swing line questionable, trying to make up what to do. I don't think it's done it just yet. The bias is down and momentum is flat. In the palladium market, did we not just talk that the market's going to fight at this battleground, and it's in it? And what it did today is I believe it made a new high for the move. You got to give it a lot of credit. This market, I really thought this could have been a top of consequence. It turned out to be not that way at all. This market has come all the way back up, and it's going to end up at this point, if you looked at the best gaining metal of the year, by far it's the palladium market. Last, let's talk the dollar index, because the dollar index is knocking on the door of resistance at the upper Bollinger Band. It is overbought in an uptrend, bias up. That's a target. Support all the way back at the 18-day average. And when I say all the way back, it's only 35 points away or so. It's not far with the 100-day supporting it. The point is there's still nothing bearish there. You know, I did the gold report, and it's interesting because if you haven't seen one of my reports, you're going to see that in this report, I'm going to cover for you quarterly, monthly, weekly, and daily charts on the gold market. I'm going to concentrate on the Feb gold, in case you're interested in that. You're going to get seasonal charts of both the 5, 15, and the 30-year, especially what happens December right into the February timeframe. I think that's important. And then our price counts, because they show you what the market at first to the downside was a target. It's been hit. Now the question is, does it go to the secondary target on those? And then in terms of timing, does the market keep going or does it give you a turn? I'll let you read the report. Go to www.iraepstein.com. Under the word research, you'll see special video report. You can also click here to get there. In the meantime, I want to thank you all for watching. I want to wish you all a happy Thanksgiving. Drive carefully, and I'll see everybody. I'm not sure if it'll be Friday, for certain Monday. Let's see what happens. Take care.